Billionaire investors Charlie Munger and Warren Buffett are well known for being uninterested in gold. Charlie Munger was even blunt when asked about his opinion on investing in gold.
Well, I have never had the slightest interest in owning gold. It's a much better life to work with businesses and people engaged in business. I can't imagine a worse crowd to deal with than a bunch of gold bugs.
Charlie Munger said, "Gold is a great thing to sew into your garments if you're a Jewish family in Vienna in 1939. But I think civilized people don't buy gold. They invest in productive businesses."
I think gold was and similar items, that was a great thing to have if you were a well-to-do Jewish family in Vienna in 1935, because you had hazards where that gold had enormous utility to you. But for Berkshire Hathaway sitting here in 2005, it just doesn't interest us at all.
Warren Buffett has also spoken extensively about his belief that people who buy gold are essentially betting on fear. Gold is often described as a safe haven investment, that people flock to it in times of turmoil in order to feel more secure and to balance out other areas of their portfolios.
Gold would be way down on my list as a store of value. I mean, I would much prefer owning 100 acres of land near here in Nebraska, or an apartment house, or an index fund. Gold, we'll say, was freed up 30 odd years ago, but it adjusted to a market that still, if you go back to 1900, you were talking $20 gold. Well, you take 20 to 400 in 100 years, the Dow went from 60 to 12 or 13,000, and then 12,000 or whatever it might have been in that same period, and paid you dividends during the time you owned it. It was 66, I think, at the start of the century, and I forget what it ended, but it's 11 or 12,000. And like I say, it was paying you something every quarter during that period. And if you own gold, you paid $20 in 1900 or thereabouts, and then we'll say you had it $400 100 years later. And in the meantime, you paid insurance and perhaps some storage cost. It really is not a store of value, and I'm not arguing for paper money, but if you're worried about paper money, and I think it makes a lot of sense to worry about paper money over long periods of time, but it's just about the last thing I would want to own under those circumstances. A farm has utility, an apartment house has utility, a business, will produce earnings, and to some businesses will produce them in real terms as they go along. I'd rather have the ability to sell people a pound of candy 20 years from now, and if they're dealing in seashells, I'll get an appropriate number of seashells instead of paper money for it. But I don't see gold as a store of value, and the truth is it hasn't worked very well. But forget about whether it's worked well the last 100 years or the last 50 years or the last 10 years. I see no reason, why it would work well in the future. I forget whether we're turning out about 3,000 or 4,000 tons of gold a year. We take it out of the ground in South Africa and we put it in the ground at Fort Knox or someplace, or in the New York Fed. And it doesn't do much along the way for anybody.
Buffett has often dismissed the idea of gold as a good store of value, but gold enthusiasts reacted strongly to those comments, arguing that the point of gold isn't what it can produce. Instead, its value comes from the fact that it's a source of protection in times of crisis.
When we took over Berkshire, gold was at $20 and Berkshire was at 15. So gold is now at 1,600 and Berkshire's at 120,000. The one thing I would bet my life on, essentially, is over a 50-year period, not only will Berkshire do considerably better than gold, but common stocks as a group will do better than gold, and probably farmland will do better than gold. I mean, if you own an ounce of gold now and you caress it for the next 100 years, you'll have an ounce of gold 100 years from now. if you own 100 acres of farmland, you'll also have 100 acres of farmland 100 years from now, and you'll have taken the crops for 100 years and sold them, and presumably bought more farmland with the process. It's very hard for an unproductive investment to beat productive investments over any long period of time. And I recognize that it's very interesting. I can say bonds are no good, and Bernanke still smiles at me, and I can say some stock is no good, and people. But if you say anything negative about gold, I mean it arouses passions with people, which is kind of fascinating, because usually if you thought through something intellectually, it shouldn't really make much difference what people say. It should be the question is whether your facts are right and your reasoning is right. But when you run into people that are really excited about gold, and I came from a family where my dad loved gold, and he was tolerant. He could take a discussion of it. I find many people have trouble with it.
Warren Buffett explained he always preferred businesses that produce something than gold, which just sits there. Buffett said, "It's a lot better to have a goose that keeps laying eggs than a goose that just sits there and eats insurance and storage and a few things like that."
My dad was a huge gold enthusiast, so I sat around the dinner table. My two sisters are here too. They will testify to it. We sat around listening to the virtues of gold, and that was in, we'll say, 1940. And gold at that time was $35 an ounce, and we would have had some storage and insurance costs. And here it is, 65 years later, world wars, nuclear bombs, all kinds of things, and the compound rate from $35 to a little over $400, less those expenses, is not something that causes me to salivate.
Buffett said there are some industrial uses for gold, such as gold-plated electrical connectors in high-end electronics. Outside of jewelry, it has a lot in common with Bitcoin. Its value is only based on what buyers think it's worth, and customer confidence is a fickle beast.
We're not enthused about gold. People historically have felt that was the first refuge from a currency that was going to be decline in value. But so's a barrel of oil, so's an acre of land, so's a piece of Coca-Cola, so's See's candy. See's candy. If the dollar goes down 50%, we will be selling See's candy for double the present price. We'll be getting the same real price for See's candy. People will work the same number of minutes or hours per week in order to buy a pound or a 2-pound box of the candy. So we would much prefer some asset that is going to be useful, whether the currency is worth what it is today or 10% of what it is today, or whether people are using seashells in order to transact business, because people will go on eating and they'll go on drinking and doing various things, and their preferences will translate in real dollars into more or less the same economics for us. And we would not trade the ownership of those kind of assets for a hunk of yellow metal, which has very little real utility except for people who are looking to flee from the dollar and in our view really haven't thought through the consequences of what fleeing would, where they should flee.
Buffett and Munger has been consistent in their approach to gold for years, and it seems unlikely that they'll change it anytime soon.